Wow. Okay. Cool, cool, cool. All right. Let me get on my Telegram here. Hopefully you can see the screen. Yeah, see, I think you're on there, brother Will. Let me know if you're on, if you see the chat, or if you see the chat. Yeah, I'm just kind of looking at things. Yeah, just kind of looking at where markets are at, and then I got to look at positions, and I just give you kind of an idea of how just what I do, what I'm gonna do today. We'll take a look at their markets. Okay, they're pretty flat. E-mini ES is pretty flat. You know what? Let me see if I can do this the easy way. Okay, let's do this. Let's link that. Give you kind of an idea of what I'm looking at today. Uh, let's do this. E-mini ES. I'm gonna go down to basically 5-minute chart so I can just see how today is going out. Yeah, the market's just opened. Their equities have just started. So I'm just gonna run through kind of what I'm looking at, and then see what could happen after that. So on a on daily, and these little what's the name lines, you can forget about these little standard deviation lines. I'm just looking at the trend, market trend. E-mini ES has been going up and up and up. Okay, cool. You're on your phone and okay, and computer. All right. Yeah. So I'm just kind of looking at where things are at. E-mini ES been going up and up and up, even though it's down a little bit today. Nasdaq has been going up and up and up. Bonds have been going down and down and down. Look at that bond. Let me get rid of some of these lines. Let me get rid of all drawings. Bonds. If we just look at it overall, bonds continually going down. Bitcoin, kind of interesting. That gives me kind of a gist of where dollars are at. Just but Bitcoin has just been ranging. It's in a massive range right here to the upside. So let's go to gold. Let's see what gold is looking like. Gold all-time highs. Let's go to silver is basically like gold. Let's go to oil. Oil has been trending down. Yet it's up a little bit today. A little bit of a pop, but its trending is down. It's kind of, so I just kind of look at that, get kind of an overall of the stuff that matters. Let's go back to Bitcoin. Again, the stuff that matters, just so I could get an idea where everything's at. And this is 5-minute chart. Okay, cool. Okay, Bitcoin has definitely been getting rocked. NASDAQ Check this out. NASDAQ is starting to make up some of the ground. So again, their market's just open. So it's making up the lost ground. E-mini ES making up lost ground. Gold. Yeah, gold is definitely just on a tear. Bonds are continually, looks like bonds want to make up some, bonds have just been, on the floor. So, it could continue going lower. And oil. Oil, okay. Oil's making up some lost ground on the last little bit. Now the most important thing is VIX. Why? Because VIX represents volatility. I just like to see it. So VIX is up just a tiny bit. So right now, again, their market's just open. So it's just kind of a wait and see, just to see where things, because I never really trade at the very first of a market open, because things are just back and forth. And I like to see how things settle down for, at least the first few minutes. Because this is where prices are everywhere. And so I just like to get the gist of where everything's at. Where, in other words, I want to see where, like, looking at Bitcoin and oil lets me know where the dollar is. Looking at VIX lets me know if there's any fear. It looks like VIX is going down in terms. The markets are going to go back up today. And usually Monday mornings, unless something crazy happens over the weekend, Monday mornings usually start flat to a little bit bullish. And so that means that, I'm going to have to search a little more for opportunities. Search for what kind of trades are out there. When Mondays or when days are bearish, the opportunities come a little bit more, just because, of course, you got volatility going up. So I'm just kind of sitting and waiting for a minute while their markets have and then in the meantime, so I got a gist of where everything's at. Next, what I'm gonna do is check my inventory. And I don't have many positions in right now. I took a bunch of them off. So I don't have very many positions. And I'm getting hurt on IWM. Silver is basically flat. I was up just a tiny bit on silver, but it's flat right now. But silver, basically it's break even on silver. IWM, I rolled it last week because it was the strikes were going against me last week. So I rolled it, and I'm looking at my deltas to see where my deltas are at. Deltas, I'm not scared of IWM because the delta, that little triangle right there, is your deltas, and I'm pretty much flat deltas on IWM. So there's not really much to do, even though it's down just a little bit. But that was just because of a roll. And I look at this. Okay, analysis. Let's take the Greeks off, the deltas off. No Greek. Let's take off expiration. And let's just keep on our theoretical P&L. Analyst, analyze, use implied contract IVs. Okay, let's see if that. Okay, so this is basically where we're at right now. So we are definitely getting into a scary point. And when I say scary, as IWM goes up, it it could get scary. It could get scary, but I'm not really freaked out on it because it's still on that hill. So IWM, as it goes down, it's a lot better for us. I did have to roll it. So if I were to buy it back, I'd definitely have, I'd be losing a little bit, but that's immaterial. What we have right here is it's still within the, the zone of, where I'm not totally fearful. And if it goes up, I'm not as afraid as if it goes down. If it crashed, because therefore, that would be definitely put me in more risk. But in terms of buying it back, I could buy it back for where it was at with a 14-cent loss. But the thing that I'm more important to me is where those deltas are. And the deltas are still kind of like, if you look at the deltas, it's pretty much delta neutral. It's flat. Silver, on the other hand, is one that I definitely have to monitor. It's going up against me, and I think I have I'm still flat profit, but it doesn't matter. Our deltas are really, really scary. It's 20 deltas. You know, even being flat silver, it doesn't help being having those deltas be like that. I always like to keep the deltas with the triangle. I like to keep it even. The thing about this is I'm getting $2 a day on IWM and about $3 a day on silver to hold this. Just to hold it, that's how much. That's the theta. Just to hold it, I still get paid $3 every day to hold it. Theta is very important. So let's go to silver and let's clear this because this is something I was looking at. And so looking at silver, now keep in mind, it's still on the hill. Okay, it's on the hill. But this, I don't like this, the fact that silver is going up and up. And because this is a naked, the other one was not naked. It was a defined risk. That's why if you look at the expiration line, which is that, the straight line, it could go endless. And, it would cost me, the buying power is like $2,000 or something like that. And I don't want to spend $2,000 on a loss that's only giving me, a fraction of a profit. I think the most I can make is like $100 in this one, because of all the rolls. But what I'm gonna do is I'm gonna roll this because he's still on the hill, but he's being that this is a naked, there's undefined risk. This thing could slide and slide, so I want to get some more credit on this because it's going up. I don't like the fact it's going up. So the thing is I'm gonna roll this, and let's go into because I was analyzing this earlier, and let me roll that strike up. I'm just creeping it out, just getting more credit should this thing go more against me. If I get credit, see, I'm only getting 8 cents credit right there, so it's definitely rolling against me. If I roll it more, I'd get 19 cents credit, so it's definitely going against me. Earlier this morning, the second strike up was like it was like 20 cents, and so it is definitely going against. So I'm just going to sit and wait for a minute. Again, I'm going to wait for markets to do what they got to do. And I'm going to roll this thing up into the 22 deltas. That'll knock my deltas down by half. And that's what I want to do is get it. Because when it gets over like 15 deltas, I get a little scared. And remember, deltas are that hill. It's like how far off the hill he's going to be. So let's go back to this. Go back to the curve. And go to analysis. And the thing is looking at, see, it makes him get closer to the hill, and that's what I like. He was a little bit up here, but now I'm moving the hill, so he's back on top of the hill, and that's very important to me. Is to keep him, because right now he's a little bit too far to the right, and the more and more I move him toward the middle of the hill, the better. The reason is because this thing only has 25 days till expiration. Only 25 days left, which at 21 days, I have to either if this thing, and here's the kicker, I was up a third of my profit until silver went to all-time highs last week. And so I erased, look at what happened with silver, when it popped. I was already up at this point about almost a third of my credit on silver. Let me see what was my credit on silver. How much did the trade price on silver when I got into it? Yeah, so I was about a third, almost a third up. And I usually like to get 50%. So the thing is it just went against me. I didn't get it. I was up a third. I was like, you know what? I could get out of this trade now, but I didn't get out. I just said, nah, I'll get to 50%. And the market, if you saw silver do what it did, it just skyrocketed. And it's going up today. I mean, it just went and just like went through the roof. And so I lost it. And so there we go with that. My credit, I'm going to try to get 21 cents now that silver is on its way back up. If it goes down, I could possibly get more, but I'm not going to do that. All I care about is the credit. So I'm going to go ahead and put a order in for 21 cents. of credit, which is about $21, just to even up that hill. And so that's the inventory for today. Just looking at what I got. IWM, the Russell. If I go through here again, it's about the hill more than anything else. And he's definitely kind of close to this area right there, but it's defined. What I mean by defined is it can never go more against me than what I paid for, or what my buying power was to get in. It can never, it could definitely crash and really go against me down here. But the thing is I could always suggest it. But the thing is it's kind of a smoother curve, and so I'm not going to really freak unless there's a market crash, or there's a market or unless the markets just go through the roof on IWM. And this is what IWM has been doing. It's kind of looks like it is hitting a point where it wants to turn around. It's not like it has to, but at least it's giving me the idea that, hey, maybe this thing is vacillating. Let's go back to the E-mini ES&P and just see if things settle down a little bit. Nah, it's still a flat. It's pretty much a flat day. So the thing is now I had some trades that I did last week that I was looking to see if it's possible that I could if they don't get filled last week, I try it one more time, and if they don't get filled, then I just let it go. So silver, I've got a working order right now. I did move the other silver around. XLF was financials. I was trying to get into a butterfly with that. XLF is down, which is financials is down. Ivy rank still kind of high, which is what I like. 5-day, let's see what the 5-day is on Ivy rank, or the 5-day on XLF. See, in the last 5 days, it's been going down in terms of its remember the 5 days whether it goes up and 5 days whether it goes down. It's been going down a little bit. Let me see, what do we got on Ivy? Let's see, Ivy index. XLF, it's kind of high. It's been going down a little bit. So the IB index, the implied volatility index, is not really up there like in the 30s where I like it. But, for this, it's not that bad. Then we go into a chart. And, the IB index it's definitely been, or the IB rank is pretty high. Average true range, this thing, it says 57 cents, so I'll make it $1 that this thing can move $1 either way on me. So I just look at that, and the trade that I had last week, not like I might do it, I'm gonna see if I do it this week, was called a butterfly. And what a butterfly trade is, and we never went over this, but this is just something I was looking at doing. What this trade is this XLF literally is and it's really in my butterfly wheelhouse. This market was down a little bit last week. And so what it is, as long as it expires anywhere underneath 50 between now and let's see how many, 60 days, if it stays there, either I make my credit, which is basically a flat trade, or the most I can make is a maximum of 107. Okay. The loss is 93, which means that if it goes over this 50 mark, that's when I start losing up here. But as long as it stays under the 50, I can either make my credit, which is nothing, it's about $7, or the max profit anywhere between, the max profit is 100, but I can make it, as long as it's 60 days, anywhere between the $48 and $50 mark, that you're going to be making a pretty good situation. So that's 48 up here after the highs, way up here after the highs up. If it falls and falls and continues to fall through the floor, I just keep the credit. And so that's butterfly trade. We never really went over that. And so that's what I'm looking at right now in XLF. And then we're going to go through, and I'm just looking at trades that I made and that never got filled, just to see if I can get back in. EWZ, I've been trying to chase this around, and that really never got filled. I've been trying to chase that around for a while. This is EWZ, Strangle. Again, my routine, I already went through my inventory, so now it's looking for opportunities. EWZ, what do we have here? Oh, hold on for 1 sec. My sinuses have been killing me out here because the winter is coming out here. Give me 1 second. So EWZ. Give me 1 second, and we'll continue. Let me do this. Okay. Now let me get back to it. So EWZ was another one because I did all my research, and the implied volatility and everything was where I wanted it on EWZ. Let me see if I can do this. There we go. Um, but again, we'll reanalyze. EWZ is the what is that? I can't remember which one it is. What is it? Brazil? Yeah, Brazil. It's the ETF in Brazil. Let me see. I'm going through trades that I never got filled and just seeing if there's still a possibility of getting in. Nope. It trended down 5% in volatility, so that is a no-go. Even though the Ivy rank is still kind of up there at 57.5. If you look at the Ivy rank, it's still good Ivy rank. The problem is the volatility already trended down. So volatility Ivy index is not really in the 30s. It went down 5%, so I can't really do much with EWZ. But that was one when I got in the trade. I was trying to get the trade on for 65 cents. It is now trading at 61 cents. So, I mean, I don't like to see if volatility trended down like maybe no more than 1%, on the 5 day, I would try to get this trade. But to see that it trended down 5% tells me that that's definitely not the trade I want. 5% down is not, that's too much of a volatility collapse for me to take the trade. So, last week would had it gotten filled, it'd been a great trade last week. XLU was another one I tried last week, but again, it's different. XLU, let's go to and see if I tried to get in XLU at 51 cents and now it's at 48 cents. This is again defined risk, what they would call an iron condor, because XLU is an $82 stock, and I would rather I wasn't able to make I wasn't able to get the the full third profit or the third of the buying power, 1/3 of the buying power. I wasn't able to get that in credit. So what I did here is I can get a third of the credit on XLU, which is 51 cents. The buying power effect is 149. That's 1/3 the width of what they call the strikes, which is great. Got to hand it to Tasty Trade for their research. The thing is he's off the hill right here. He's a little bit up off the hill, so he's fixing to go down. So I don't like that. I like to keep him when I start the trade. I want him to be in the center of the hill. He's going down toward the right side of the hill, so I'd have to move these strikes to keep him in the hill. If I move the strikes, will I continue to get 1/3 of the width? So XLU, it went up 0.1%, which is not much. Ivy rank is still high. I like that. Ivy index, it's not really that high. It's only at 20. So it's not really like the greatest of trades for me. So let me see if I move these strikes to where, because again, he's up off the hill. I'm going into December because I want to make sure I'm 60 days out. Anywhere from 45 to 60 days out, I like. Notice, see, this is telling you that he's off the hill, so I would have to move these strikes up. And this is basically a binary system. When I say binary, it's just that it's basically either heads or tails. Why do I say that? Because the strikes are so close together. My risk is so close together If I really wanted to make this like a strangle, and get a lot more profit, I would move my protection. So let's move that. And okay, I see there's no volume on this. So again, liquidity is first. So there's no volume. This trade is off the table. I have to see a lot of volume in order to do this trade, so it's off the table. What else did I get in last week? Or I tried to get in, never got filled. Oh yeah, Alcoa. Alcoa. I think Alcoa is off because we were trying to get it for 179 last week. It's at 161, so that trade is off the table. And when I say 161, I already lost $11 in this trade. Just or 11 cents in this trade. I already lost it. I wish it got a filled last week. It'd have been perfect. I could stay in this trade. Anyways, let's look for some new ones. So the ones that I was trying to get, that inventory is gone. So now let's look for some new trades. Give me one more second here. Let me do this. And we're going to look for some new ones. So we couldn't find the old ones, the ones that got the first thing I looked at is the trades I'm already in. The ones that I was seeing, hey, could I get back in? Are those opportunities still here? But they're not. Now we're going to look for new opportunities. 1 second. Okay. Yeah, man, I got to tell you, man, my sinuses is just tearing me up out here today. But I've been out and about this whole week. I went Saturday to that tasty trade. It was nice. A nice little form. That young brother, I got to tell you, that was so hilarious. I mean, the only thing that I was kind of scared of is he was very effeminate. And, and I was kind of like, ugh, that's no. He was definitely more effeminate. And in California, when brothers come off as very effeminate and very like, clingy, for lack of a better term, especially when it's somebody you never met in your life, you got to be very, very careful. And that was crazy at that tasty trade thing. I mean, it was cool. And then yesterday I had to run to the farmers market, which is like 2 hours away. They have farmers markets all over all over LA. And for people that are blind, they get like they give you money in order to go shop for this program. To say, okay, for people that are blind or don't have any vision, they say, oh yeah, we'll go ahead and give you a certain amount of money to go ahead and shop just because you don't have any eyesight, this, that, and the other. And I'm not going to say no. I will travel. Plus it gets me on the train, and I don't mind being on the train, so I'll travel to do it. I was like, okay, shoot, if you're gonna, I've got like, I do a lot of cooking, so I said, let me go get some green beans, some collard greens, and everything else, because hey, you're gonna pay for it. I'm not gonna tell you not to, So I ended up doing that yesterday. 2 hours on the train. And then yesterday, the day before, was another 2 hours to do that tasty trade because that was up in Hollywood. I had to, but it was a really good forum. They had building a portfolio, which was great. How they build their portfolios. Mine is a little different. Like I said, I don't have any real trades because all I do is this is my total income trading. It's not about being speculative and trying to be right. No, I got to make this money going up or down or whatever. This is just purely bringing money in. That's all I care about is just, trade to bring the cash in and not necessarily trying to speculate to be right. But let's go ahead and look for some opportunities. I'm going to see if there's any I tell you, man, you know how many farmers markets I've been to? Because anytime somebody gives you free food at a farmers market, well, it's not really free. They give you, they say, here, you could have some money. Even though I went out and bought some stuff for my own, situation. I like to buy like halal lamb and stuff like that. But but if they're going to say, here, you can have some money if you want, since you're blind, you can get, we'll pay for it. I'm like, Hell yeah. So I went to, I just started knowing about this year. So I think I went to 6 farmers markets this year, all over Southern California. I just said, okay, let me get on a train. And they're like, yeah, well, here's some money, buy yourself, and I'm talking about a month's worth of food that they said, hey, since, and it's a blind and low vision program that they do for the people at the Brill Institute, because most of the folks are seniors, they're in their like 70s and whatnot. And so they do that. So I just said, hey, I'll be a senior. And shoot, since I like to cook, and do my chefing, I just might as well do it. But anyways, let's go into look for some opportunities. Let's look and see if there's something we can get in some new trades. Because I really need to start filling up the trades. I closed a bunch of them last week, and I really, really need to get into some trades. And a lot of them didn't get filled. And what we have is what's called earnings season. And earnings, um, I could teach you earnings trades, but that's like flipping the dice. That's like, think of like non-farm payrolls and steroids. You know how when folks do non-farm payrolls and they're trading currencies and they try to be right, and this and that, and you know how it's a binary situation. It could go up and down, but it goes up and down like incredible, like massively. And so earnings, I don't like to trade earnings when I'm doing income, because if I'm doing speculation and just trying to like bet on the markets and gamble, okay, I'll go ahead and do that. But if I don't want to gamble, I am not. There's no way on this planet that I'm going to do earnings. I don't like to gamble. I don't like it. I like something I like an insurance company. I just want to make sure that whatever I do is conservative, at least on bringing money in. On the bring the money in trades. So, anyways, and look at silver. This is why I'm getting hurt on silver, because the volatility has expanded in the last 5 days. So it's definitely it's definitely been going up on silver. If you could see, of course, let's go here. Silver SLV, is even though it's not terrible, but it's definitely expanding on us a little bit. So I definitely want to get that back to delta neutral. Get that back to where it's right in the center. Right now, it went down. Remember, it was 20. So let's see if we could, now that it's down a little bit, we can even move our credit to 22. Yeah, so we're gonna just keep moving our credit up. I like that. I don't mind. So as long, if they're gonna give me more credit, I'll take it. So that's good. Gives us a little bit. The more and more or the less and less silver moves up, the better it is for me, so I could get more credit out of the trade to keep him in the middle of the hill. Because I got to start looking at closing that trade in the next couple of days, because of the fact that I don't keep trades after like 21 days. That's why I have to hand it to their research over at Tasty. So, anyways, IV rank. Look at KRE. It's through the roof. IV rank, even though it's gone down 0.5%, it's through the roof. High index. The only thing is that it's been going down a little bit. So I like KRE. Delta Airlines, I believe, has earnings soon. Let's go. And I don't like earnings. Delta Airlines overview. Overview. Quote details. Because this is we're in the earnings season, and well, it says no earnings right now. I thought Delta would be soon, because usually all the airlines usually report around the same time. And I thought American Airlines, yeah, because 1024 is American Airlines. Delta, I wonder why Delta's not. Because that I would normally see their earnings right there, because all the airlines report at the same time. So we'll take a look. Maybe it's just not. Let's see a Delta. The best way to tell earnings is look at the IV, and if the IV pops like massively, that means earnings. So no, I don't see it on Delta. Okay, cool. All right. Delta Airlines had let's look at that. Extremely high IV rank, high IV, and it's been going up. I'm almost sure Delta's got earnings. XLU, the one we looked at earlier, uh, same thing, except for the IV rank or the IV index is only 20, so it's not really something I'm looking for. You have to excuse me because my sinuses are just killing me. Okay, so let's go to gold. I already got a silver trade on. So I don't necessarily care about GDXJ. That's gold. It's gold miners. Yet I don't mind that trade. I normally like to put on no more than two metals trades because metals has just been in one direction. It's just been going up, and so why would I put two trades? So GDXJ. Oh, let's auto refresh. Okay. XOU Tilray marijuana. Do I really care about marijuana? Nope. Hard to borrow. Okay, which Tilray means that that's one of again. I don't want to say it's a meme stock, but I don't like hard to borrow things. There's no earnings where the E is there. No earnings in the near future. Um, and the best way to look for earnings, you go to the trade and you look at your implied volatilities. If you see it, look at that 100, and it's going down and down. If you see a spike, usually where it spikes, like of course November 1st is 100, but if you saw like 110 or 150 or something like that, that means earnings is happening. If I took Tilray again, I'd go 60 days out, and the implied volatility. So there's definitely no spike in there. So but Tilray is like it should be on the floor because I think marijuana stocks were falling. Yeah, they've been falling all year. Marijuana stocks, so it's been on the floor. But look at that implied volatility. The green and red line, how squiggly and crazy it is. Even though this thing moves like it can move anywhere easily. It says 10 cents. I always double it. To me, it's not. I mean, it's a penny stock. The Tilray, the marijuana stock. I mean, what is it like $1? And that thing was much higher earlier. I mean, Tilray was extremely. Look at that volatility. I mean, this thing it was much higher a long time ago. I don't even think that they split. It's a marijuana stock, but yeah, for me, I just can't. It's just too. Look at those spikes, too volatile for me to get in. But I just like the volatility. Let's see. Yeah, there's barely any. There's no strikes, barely any volume. This is definitely not a trade. GDXJ, that's what we were at last time. So I have my eye on KRE, Delta Airlines, GDXJ. Let's go to Freeport McMoran, which is copper. And is there earnings? There should be earnings happening on this. No, I thought we were in earning. I mean, American Airlines. The airlines are usually where earnings starts. So yeah, because it should be earnings season. Airlines are usually first, and then it goes into that. Apple's earnings are the 31st. So yeah, we're in earnings season. But why am I not seeing? Maybe FCX, Delta. That's interesting. I do not see any earnings in Delta. FCX, Freeport McMoran, the copper company, and these are stocks. Delta, that these are not ETFs. And these are all high options volume. What I start with, just to give you an idea, I started with stocks because I already went through the ETFs last week. But the first thing I look for is liquidity ETFs. Remember, liquidity is king. Liquidity is completely king. Implied volatility is queen. So if I was just doing ETFs, I don't really trade USO because I've USO to me is not necessarily something where again the king and queen, the king is there, but the queen for me is a little too much. It's like Tilray for me. This is USO in the last. This is the a 1 day chart. Look at again. Like I said, it's a lot like Tilray. USO can move even though the volatility has been. I mean, just in the last years, it's been ridiculous for me. Where I can't really trade it, but it's up at 73. This thing can move $4. If I were to do USO again, it can move $4. I'll go into looking for the strikes, and this since like I said, I had to go out 60 days. I mean, I'm not. I would never do like a strangle in USO. Again, that's oil, just because when I see what's happening with oil, not just in the geopolitics, just look at oil. I mean, this thing can move, and if I were doing strangles, I would be more liking. I would be gambling, because if I did a strangle, it had to be really, really wide. Because I would like to get all of this. In other words, it's been way up here at 82 and all the way down here at 65 easily within that's the last few weeks. So 82 to 65, if I were to do that, it would be like, I really, really have to be careful. I could go, well, 63 and 82. So it'd be like 80 up here at around 85, 85 down to, let's say, 62. Let's see if we go down even further. See, no, and look at the volume. There's no volume here. So I couldn't do this. There's nobody trading. Look, zero contract, one contract. Come on. So yeah, USO is one of those that I really, really don't trade a lot because I don't. Again, the king, queen, the king is there right now. I thought the king was there. I think last week the king was there, but there's no volume, so I can't do it. And I'm talking about income trades, just not speculation, just bringing money in. The speculation trades are like the one I showed you, the butterfly earlier. So let's look at TLT and see if the volume is king. Okay, there's a lot of volume on this. Like, there's only 632 contracts in USO. There's 6 million on bonds on TLT. So I could, that's again the millions, the king. I love this. So king, the queen, except check this out. IV index, not really a lot. So again, I like to see things a 30 and above. Let's go to, okay, again, I'm gonna start out with a strangle because it's about income. 18 deltas. We're going to go because anywhere closer to 16 deltas is where I want to start. 16 deltas. Okay, there's 600 contracts here. Okay, there's 57 contracts. We'll do this. Okay, 15. So we're close. Okay, so now let's look at the trade. In terms of, we're going to look at the mountain to see what the mountain looks like on this guy. Analysis. And let's go to the curve. I want to see what the mountain looks like. It's nice and smooth. I don't mind this. He's up on the mountain, kind of smooth. If he fell off the mountain over here, because we're getting, so here's the problem. 109 is the credit. Buying power, so it's 1/10 of the credit. For me, that's not enough. Now, for Tasty Trade and a lot of these other guys, I've seen them do that, on their strangles. For me, there's no way, especially on a stock that's is $92. I can't do it. I like to make sure that it's a better. I like to get at least a third of that, so it had to be a $300 credit. Well, this stock's not going to give it to me. Some stocks will, but this one definitely is not going to give it to me. Remember, the more credit, the merrier. If I'm only going to get 1/10 of the credit, I can't do a strangle, but I can do a condor. I can do an iron condor, but my strikes are going to be kind of close, and I don't like that. Hold on for 1 second, because but again, we're just looking to see if there's opportunities, for to see what stocks we can trade. Okay, yeah. I mean, this is just I'm making it a lengthy process, but I know this normally takes me 15 minutes, but I'm just showing you. This usually takes me like 15 minutes in the day. Then I come back later in the day, spend another 15 minutes looking for opportunities. If I don't find it, then I just go and I just move on, go about my day. So, anyways, I look at this mountain. Look at how steep this is. I mean, it's still okay. It's just kind of a steep mountain, and I noticed that the for me, I like a nice, like, again, that frown, which means he could fall. If I were to do this trade, I would have to put some protection from him to fall off that mountain, and that's where you do what are called iron condors. Or again, this is just purely getting income. I don't care about anything else. So if I went down a couple, or I would go to the 10 delta here, which means a 10% chance the market will get there, and 11% chance. The only thing is there's no volume. There's really no volume down here, but if I did this again, it's binary because the strikes are so close. I'm only getting 40 cents out of 160. So that I'm not getting a third the width of the strikes. It's not worth it. It is not worth doing this trade. Let's move these strikes down even further just to see if we move our protection, moving so he could get a little risky down the hill. You're only getting 51 cents at a 249. That's less than a quarter. That's about less than a that's about a sixth. So it's not worth it to do income. At least the kind of trades that I want to do, income driven trades. So let's continue. Okay, we talked about GDX, EWW. Again, look at only 119,000 contracts, 200,000 contracts, which the king is not there for me in terms of, even though they say it's liquid, it's not as liquid. Although we do, the queen is cool, volatility and all that, that's cool. So if I went to this, to EWW and did the same thing, again, we're looking at no volume. Okay, barely anything. Look at that, barely anything on these contracts. So the king is not there, the volume is not there for me. EWZ, that usually has volume. Okay, we got 150 million. We're up. Okay, look at the Ivy rank is cool, but look at the queen. She's barely hanging in there. Look at that. It already went down. So EWZ, we looked at that earlier. That's a no-go. Emerging markets, China. Now here's what I did, and the reason this is all the emerging markets: China, Brazil, all these, everything but Russia. So, anyways, if you see this, remember what happened with China, and it just popped and exploded because of the stimulus. That could happen again. I'm not saying it's going to, but it could happen again. And the thing is I just got to be careful, because remember, when things gap like that, they tend to want to go ahead and fill that gap. Because before that gap, you had massive amounts of orders. People call it resistance. I don't care what they call it, but it just gaps. I'm not saying it's going to fall through there, but why not? So I have to prepare like, hey, this thing could easily fall. So anyways, let's go and look at the king, queen. The king is emerging markets. They do have enough contracts. Implied volatility is up. The only thing is the IV index. Again, I like to see that in the 30s. It's not there. Don't like it. But if we were to try to trade it, go out to December. Again, but basis for everything for me is a strangle. Let's go to the first standard deviation, which is 17. Look at that. One contract. This is not tradable. Standard deviation out to like 17, two contracts. It's not tradable. You're only getting 68 cents on $576. I can't trade that. And again, I like to go out like 60 days. I don't like to go any closer because, XOP, let's go here. I had some XOP. XOP is usually a good trade. It's only really like 583. Check this out. Good queen is cool. The king is very meek. There's not really much in the king. He's like USO, damn near nothing. But I have traded XOP when there was, but I like to wait till that gets up in the, a little bit more in terms of how many more contracts. The millions, again, the king is cool. All right, anyways, we have Ivy rank, the queen is cool there. She's just barely cool here. It's been going down a little bit. The thing is, it's $134 stock, so there's no way that I would do a strangle on it, because it's very, very expensive for a strangle. So that is definitely Iron Condor. Let's look at the strangle, 16 delta. 16 delta, this is 24. And remember I told you about skew. How far away, like this delta, and again, there's only 4 contracts, so there's not much happening up here. So this is not necessarily one of the best trades. Look, 264 out of 1347. I would love to get more. That's not really enough. I would have to do an Iron Condor on this if I did this. So so that's in terms of just pure strangles. I'm just looking at strangles right now. I couldn't put this trade on. It's just not. Even if I go, remember the Prince's expected move, and they expect this thing to move $12 either way, which is probably around here, the 22 deltas. Even if they expect it to move, you're only getting, like 1/5. No, let's see, 3 times. Let's see. We're getting a quarter, about a quarter instead of a third. 334, 1348. You're barely getting a quarter of the credit. So that's definitely Iron Condor, definitely not strangles. Remember, I start everything on the strangle to see what's tradable. And then if it's not strangled, then Condor. SMH, I traded that. We're at 52. Again, not a lot of volume in terms of the king and queen, or the king. Queen is up though. She's only been, this is down almost 1%, 0.7%. So I'm not going to really freak. SMH, I've traded that before. I had a really good trade on SMH that never got filled. It was a great trade, but it is what it is. But it still has a lot of implied volatility. Look at the queen. December implied again. I'm looking at the queen, and this December strike is up. Okay, good implied. Not a lot for the king, but good for the queen. Let's look at the strangle. That's where look, no volume, so I can't really, if I go in, let's go down to the 15 delta. There's only 3 contracts there, barely any volume. Again, less than a quarter of the buying power. It's just not enough for me to do a strangle, but I can do condors. If I were to do this, if I do condors, again, there's really no volume, so I'd have to really, really be careful in this. Look at that, 420. That's 25 cents between the bid and ask strike, the bid and ask price. I would have to do a condor with close wings, and that would be 20. So I would have to do that with a $2 wing protection, basically. $3, $6. That's 50%. That's better. It's looking much better in terms of because I'm getting more than a third the width of the strikes. Okay, so this right here is definitely on the table. Not sure if I would trade it just yet because I have to go through my other metrics. If I wanted to move the protection out a little bit to the 10 delta, which means only a 10% chance this thing will go haywire against me. Oh, there's no volume. So again, the king is not really there. There's and the way to tell is look at the spread between the natural, i.e., how it's from 411 to 470. That's huge. The mid price is 441. So that tells me if I'm gonna do this kind of a trade, I would move to try to, I'd go anywhere between, look at that, like a 40 cents between this and this. I'd move it to the center. Chances are I would never get filled because again, there's really no volume. Look at that. There's, because all 4 of these have to get filled. There's no volume in this. And if I go to open interest, it'll probably be even worse. Nope, open interest. There's all these folks are still holding on the contracts. So there is open interest there, but there's really nobody's really trading down there. But anyways, we looked at this, 437 of 1,000 of our buying power that would cost me $1,000. 437 would cost me $1,000. Do I want to put $1,000 into this trade? Not really. I'd rather put the 600. But the tighter you make this, the less probable that it's going to happen. The wider you make this, the more probable that you're going to have this. Okay, that it's going to work. So if I did this and I want to tie up $1,000 at money, let's look at the charts. Okay, SMH, that was the stock that's just been on a tear going straight through the roof for a while. It was doing that for a while. Hasn't been up to these areas. Last time it was up in these areas where it's at right here was back in August. So it's taking some of the steam out. Remember, this is tech. This is all your Amazon, your Nvidia, your AI, and it could get back there. This is the AI bubble right there. It could get back up there. We're in an election year. Who knows? This is between now and December. This thing has the ability. Again, look at the IV rank. It's not really where I'd like it. I liked it when it was up here because remember we're selling implied volatility. I mean, it's good, but it's not incredible. This thing can move. It says $6. I'll say 12. SMH, because I always double it. In the next 21 days, this thing can move $12 either way. 252. So I look at the trade. This thing can move $12. So it could easily, 250, 240, 230, it could easily get down to there within a couple days. Not to say it will, but that's how I look at it. Because in the last 21 days, the average that this thing I say can move is 12. They say the average is 6, but I always double it. And I double it just because I was just scared. Because, again, it's an election season. Anything could happen. You got, I'm not saying that that's going to be a factor, but it could be a factor. Look at what happened with China when all of a sudden China decided to give stimulus. A lot of people got blown out the market because of that. They got blown out the market because, China decided, if you look at FXI, it just went through the roof. But anyways, If I did this trade as an iron condor, I'm gonna keep this on the keep this on the thing. Let's look at this. Okay, let's look at the hill. And again, it's kind of a steep hill. Even though, I mean, yeah, see, I look at this and I just look at this hill. Of course, I got this magnified, so it's very close, but still, yeah, I'm looking at, when I say a steep hill, when I look at remember the break evens, or I mean the not the break evens. When I look at the where I sold these strikes, I look at how far I sold these strikes from the the theoretical, which is the day-to-day price, the hill. So how far this is to the hill determines steepness. And when I look at that, it tells me if this thing fell all the way down here, how much would I lose? I'd be down um I'd be down, what is that? About 100 and what? If this thing fell tomorrow down there about 100 and some bucks, so I'd be down 10%. And that's what I mean by the steepness of the hill. If it went through the roof in a couple days, between that and or if it went up there tomorrow, I'd be down 20%. 20% in a couple days. If this thing spiked. And so that's what I look at. If I'm down 20%, that means I would have to manage and I would have to do something. And that's kind of scary. Manage means you would move these strikes. Remember, I was telling you to move the strikes? And what that does is it makes it even more, you spend more money if you have to manage these things. It would bring this up it would bring it up by $400, which is spending another $400 to manage it. Even though I would get credit for it, I would be credited for it. I would, if I move this up or move any of these strikes, should it fall on me, I'd be getting another $100, but I would be putting myself, for that $100, I'd be paying 4 times that in terms of how much money I have to take out of my account just to keep the trade on. So that's why I'm very, very particular about that. So if I went ahead and let's go back to the $2 condors and not the $3 condors. If I did this, I'm not saying I'm gonna do it. If I did this, like I said, every trade I get into, I look as if I'm gonna manage. I never get into a trade without knowing, hey, I'm gonna have to move these strikes. Every trade I know, I'm gonna have to move strikes. So if I did this, I could tie up $600, getting a lot of credit for it. That's more than a third. That's an incredible amount of credit. I don't mind that. I like that. But you're gonna pay the price for it. And you usually pay the price and in the hill, the gamma. Remember the hill. So this is my hill. It's a lot better hill. It's a lot more smooth. Why? Like I said, I want to see. It looks like it's a lot more smooth. Maybe not. Let's see. If this thing fell down here, okay, we'd be down. If it fell, we'd only be down like, what is that? Well, we'd be down like $100. $100. So, I mean, it's not a 10% of this right here of the buying power, but it's a little bit over 10%. So it's like a little scary. Over here, if we went down, we would be down about 15%. We'd be down 15% if it went, again, like I'm saying, if this thing just spiked up to our short strikes or spiked down to the short strikes. That's what I mean by the hill. So the hill is kind of still steep. So it's even a little steeper on the downside. So it's a little bit, the more that you protect it, you're going to pay a little bit. Now, let's go into the metrics. If I did this trade, I'm going to keep it on the table because I don't mind the fact that I'm getting this much credit. I don't mind that. It's just that I look at, again, when I was telling you about the hill, I just want to keep this guy in the hill. If this thing moved and it dropped to say this thing went down, or no, if the market went up, excuse me, and just went all the way up and skyrocketed, I would have to move this. Again, we're moving this up. If I move this up, I'm always looking to say, okay, what would that be the effect? Even though it's not going to be, this much, it would definitely be close to how much I would have to keep in my account in order to keep this trade on. I'd get more credit down here. When we were here, it's 320. I'd get like about $100. I get like 10% more, but look at what it does to the buying power. I'd actually spend more money out of my account to keep that trade on. But since I'm getting a lot of credit, yeah, I wouldn't mind that. And my initial credit is damn near half. So, I'm not really mad about this particular type of trade. Again, you want to get a third the width of the strikes. And again, we were at our first standard deviation. No, we're not the first standard. We're at 20 deltas, which is cool since you got protection. You can do 20 deltas. You got protection, 22 deltas. So you got protection here for this iron condor. Remember, China made SMH and a lot of these other things volatility when we went back here. It's still kind of elevated, not ridiculously like in the 70s and 80s, but it's still above 30ish. 51 is cool. That's cool. Uh-oh. Look at that. Volatility is going down. So it's not necessary. Man, I think it was 0.7 before. I may be wrong. So that's a little scary that the queen is trending down in volatility. But we'll wait and see. It's not a deal breaker yet. So this trade has a 77% chance of giving you 50% of making 50%, which is like 100 or 161, I think it is. Yeah, 161. So theta, you get paid $3 a day for this. The probability of making a penny by expiration is 60. I don't mind this trade. Delta, it's a delta neutral. Gamma, the hill, the frown of the hill is not as bad as I thought. So this is not a bad trade. Now let's see what would happen if the only thing is the volume of the strikes. There's no volume on these strikes, and that's a deal breaker. But anyways, I'm just saying if I got this trade on, remember 285 to 350. Look at how wide the spread is between the natural and it's just I would move my mid price instead of 316. I would move it up something ridiculous just to see if there's a market, because it's just too wide of a spread. It's ridiculous. There's no volume on this. But anyways, let's look at December 20th. Let's see what would happen after 2 weeks. So it's 321 is what we get as credit. So let's go 2 weeks. Say if we held this for 2 weeks. If we held it for 1 month, excuse me. No, what is it? December 20th, so almost a month. So about 3 weeks, we would have made, about $100 on this. So if we held it for about a month, a little around a month, say around a month, we'd be up about $100. So we would have made about a third in a month. It would have made a half our money between now. So a month and a half, we would have made 50%, just theoretically. It's not a guarantee. I'm just saying theoretically, we could do that. So I'm gonna keep this on the table. The thing is I'm gonna wait and see if volume comes into this, and then if more volume comes in, then instead of doing it for 319, I'll do something ridiculous. Because look at the bid ask spread; it's just ridiculous. The mid price is 319, and you got a bid ask of 287 to 287 and 350ish, 353. It's ridiculous. But I'm just looking for income right now. I'm not going through like butterflies or lotto ticket trades or anything like that. I'm just looking purely for strangles, just to see. And again, it's Monday. Market's just open, so everybody's getting their feet. Let's see what happened on our positions. So nothing's really happening. Silver, so nothing's really going on. I still got those trades on. But I do need to get some trades on because I only got 2 right now because I closed the other ones. So I do need to get something happening. So let's go back to the ones that I knew that were a little closer to tradable. Those are the ETFs. Now let's go ETFs and stocks. So we're going to go back to liquidity, high options volume. We started out with KRE. Okay, because that was definitely, it's still in the wheelhouse. And keep in mind, it is definitely extremely volatile. This is what's been happening in the KRE. Just look at the chart. It's definitely up there on the IV index. Let's look at this thing can move. We'll say $3. No, say $2.60. This thing could easily move $2.60. Just by you can look at the chart and see that, but especially back in what was that, July? This thing could easily move $2.60. What is this? I can't even remember. Is that building? No, it's regional banks. Okay, I understand. So, anyways, we see that. Let's go to trade. Let's go to the strangle. 60 days out. There's not really a lot of volume. And let's go to the first standard deviation. Okay, look at that, from 23 down to here. So we're not really going to see, because we're only down to 10 deltas. Somebody believes there's something. I didn't go through skew, because again, I just want to see where the strangles are at. This is not for, we could go into skew later. And remember, I showed you about the skew of the mountain. So 107, we're only getting 1/10. Even if we move the delta, we're only getting a tenth, or 10%. So this would have to be a condor, because I'm not getting a lot of, only getting 10% on the strangle, which a lot of folks get. They don't mind that. Me, I do. Especially going out 60 days where you get more credit, where you should get more credit. Even though it's very volatile, there is a lot of volatility. Problem is there's not enough for me, because with this stock, which is, even though it's only a $58 stock, I want more credit, but there's no volume on these strikes. So I would have to definitely do a condor. If I did a condor, again, if I did it, I would have to make it 3 days out. Again, there's no, okay, I got filled in the other trade, the silver. So silver's back. So I got him in the middle of the hill again, on silver. So if I did this, I would have to buy protection, which is $3 away on each one of these. $3 away on protection. Delta is, wait, let's see, $3, 51 down to 3.48. Okay, delta, let's see, 51, 3. Yeah, so 65. Oh no, that's not $3. Wait a minute. I'd have to go $5. And I'm thinking 3 strikes. $5 there. 51 minus 5. $5 here. Now we're delta neutral. I was doing strikes, but okay, now we're closer. Actually, we're not even neutral. We're more, because it's now skewed. So it is definitely skewed to the upside on this. People think that it's going to go up. It is what it is, because I'm 4 deltas. Even though my strikes are equal distance, I'm 4 deltas away. Wait, I'll tell you why. My bad. Tell you why. We'll go from 53 to 48. Now we're delta neutral. That's why I had the strikes off. Anyways, 22 deltas. Okay, but look, there's no volume. I can't do this. No volume. I'll keep it on the table in case volume miraculously gets up there. Let's look at our hill. And again, okay, how steep is the hill? Okay, if we were to do this and the market fell down here, theoretical, we'd be up a little bit in price. Interesting. Okay, if it fell down there, but look at the hill from where that is, we'd be up just a tiny bit of the 347. I do like the fact that on this we're getting a third the width of the strike, or close to. If it went up, we would be down. If it just went up to the short strikes, we would be down. Gosh, it's a 68 of 68 of 37, be 1/6. So I'm not really freaking. It's not. I mean, it's more than the 1/10, so it's kind of scary. It's still kind of scary. If it went up there, we'd be down, 1/6. So it's not really a fun trade to the upside, because it's skewed. If you could tell, that's the skew. The hill is it's a lot steeper here than it is over here, which you could get more, which means we can drag this out, but we would change our deltas a little bit. This has an 82% chance of making 50%. You get paid $1.50 a day. You got 61% chance that this thing is going to make you, that it's going to make you a penny or more by expiration. We'll see if there's more volume coming in. This is 123 to 130. I'm gonna move this up and see if the market. So I don't mind this. I don't mind this. I think I'm a sit on this trade and see what happens a little later. I kind of like this. I'm definitely gonna sit on that trade, because I may end up doing this one onto that. So we went to carry. Let's go. Oh, wait a minute. With carry, let's do one other thing. Since we've got 48, 53, 65, and 70. Let's see what happens in a couple weeks. So 60 days. Let's go back. Let's see. 48, 53, 65, 70. Let's go back. Okay, okay. So what do we have here? We went up. We were like 130. So if we went back, we'd be okay. I don't mind that. We'd make a little over $30, and let's see how many. No, that's about 2 weeks. So yeah, it's not really great. Let's go back another. So in about a month, we would make about 40. What is that, like 30%? We'd probably make about that 30% in terms of and keeping our credit. So it's definitely, and that's just because of the theta. So I mean, yeah, I'm gonna keep this on the table, but I'm gonna keep it on the table at around $1.30, a little less than $1.30. I'm gonna keep it on the table. So I don't mind that. I do not mind that trade whatsoever. We will definitely keep it on the table. Okay, so we saw KRE. Delta Airlines was the other one. Let's see. And I thought Delta's not showing earnings, but American Airlines has earnings. That is, you know what? Let me see, because that doesn't make sense. I don't see it on Tastyworks, but I do like. I've been doing pretty good on airlines the whole year. Let's see. We're gonna double check. We're gonna double check. Yeah, because that's good. So SLV, okay, okay, they already did. So they had earnings. Okay, cool. Okay, October 10th. Yeah, okay, so they had it. So Delta, I like that. 74.41, volatility's going up. What do you got for me, Delta? So they had theirs last week, okay, or a couple weeks ago. Okay, cool. So let's go into the trade. Let's look at the strangle. 16 deltas, 17's as close as it gets. 17 here, 16 here. Wait, delta, no, that's 22 delta. 15. Okay, there's not a lot of volume. We're not getting a lot of credit for this. We're less than a third of the strikes, but it's not off the table. And I just have to do a condor. I mean, I just like to get as much credit as possible for strangles. 87%. You get paid three. That's good. I mean, all this is great. You know, I would tie up about five. I don't mind this. I would tie up about five. So if I did this as a strangle, I would tie up about $500 worth of buying power. I don't mind this as a strangle. I don't care about it as a condor. The only problem with the strangle is I'm not getting enough credit. I want to get more credit. I mean, the good thing is it's only going from 140 to 150, so it's definitely a lot better in terms of the tightness. The only problem is I'm only getting 4 strikes over here and 2 strikes over here, so there's not really a lot of liquidity. There's not. I mean, remember, king is liquidity. I need to see liquidity, which means that I could possibly get more credit. There's not enough credit for me, but I mean, if I did this, would I even care to do this as a condor? Not really. Not really. 65. Okay, we'll go $5 on each side. 65.70, 48.43, 90 of 410. No, I wouldn't do this as a condor because I'm not getting a third the width of the strikes at $5 away. So yeah, I would definitely do this. I don't mind this as a strangle. I'm gonna keep this on the table. I'm just waiting to see if there's any volume coming in on that. But there's not there's really no major volume. So let's go into Freeport McMoran, and that's the thing. FCX I thought had earnings coming up, but I don't see any earnings on this. Wait, let's go back to earnings. Freeport McMoran, okay, not mad at it. 68, lot of contracts. 68, 43. Even though the queen is going down a little bit, I don't mind this. See what we got for strangles. December, go to the first standard deviation. 17 as close as it gets there. And 22 as close as it gets here in terms of our delta. I'm not getting the 16 delta here. So, $1.57, 480, not getting enough credit. But I'm not really pissed at this trade. I'm just like, it's not totally off the table. Let's see if we did it as a condor. with just $5 strikes either way. 42 minus 5, 37. Nah, look at that bid ask in there. No, 103, 397. No volume. There's no volume on the Condor. The king is not definitely happening. To the upside, maybe. Then I would be looking at like Jade Lizards and stuff like that, which is a whole different strategy. Right now, I'm just showing you strangles. I'm showing you strangles and condors, that are basically income. All I care about is income-driven trades right now. I can show you the more speculative, like if you're going to pick a direction, or at least be like income and direction. That's like butterflies, jade lizards. There you're picking not only the income trade, but you're also saying that you have a bias, whether it's going up or down. Right now, I'm just showing you no bias trades, purely income, just bringing money in. You don't care to speculate. You don't want to gamble. I don't like gambling. Remember, this is about being conservative and being, systematic and just being, it's not like you have to be right. It's just that you just have to manage, a trade that you can manage, and the way that I showed you is when I was moving strikes. Like every time I get in a trade, no matter what it is, I always say, I'm going to move the strikes regardless. Doesn't matter. I know that when I get into a trade, I'm going to end up having to move the strikes, regardless of whether I think or not. I know it's going to happen. I just know that. So when I get into a trade, I take into account what will happen if I get in. Like if I got into Freeport McMoran, I instantly know that I'm going to move these because of the hill. I just know that, even though I may never have to. I may never have to move the hill. Let's see. Let's get back to analysis. My bad. But I just instantly tell myself I'm going to have to move this just because of the nature of the game. That's just like if you saw what happened to me today, the SLV trade. Like if I got into this again, I want to see how far from our let's do this. How far from our short strike to the hill? Okay, how much am I losing or making? If this thing went down here, it'd be down like $100, which is a quarter of the buying power. If it went up to here, it would be up damn near. Let's see, that's 221. It'd be damn near half, 50% of the buying power. What I mean by that is that tells me the steepness, and that means it's skewed to the upside, which there's, chances are this thing will go up, which means the volatility will more likely go up because it is copper. The thing is I want to get paid for that. And the way I do that is if it moved up and I'm losing, like if it moves up on me and I know it's going to move up, I instantly know that I'm going to have to, the moment I get into this, I'm going to have to try to do whatever I can to keep the guy on top of the hill. So any trade you get in, you're going to adjust. That's just the nature of trading because markets don't always just stay still. So if this thing moved up and this thing has a possibility of going, I double these, of going $3 up or down either way, in the last 21 days, I say this thing can move $3. Look at this. It moved up from 44 to 47 overnight. It went from 47 to around 52 overnight. It went from 50 to 48 overnight. This thing can move $3. And so I have to take that into account because I always double it, that this thing can move. So from 47, it could get to 50 overnight. So if I do that, and I know that if this thing could easily get to my short strikes, what am I getting paid? If it's going to be double, again, the steepness of the hill is how, is what I look at. The difference between the solid line right here, and if you go straight down, where, how much would you have to pay? What says 220, you can barely see it, but it says up here where these thing that's moving, that box, it says if that thing moved, you would be down 20%. If it moved from 47 to 55. And I'm just saying if it did that overnight. So if I did that, I would have to move this to get that back to delta neutral. If I moved it one strike up, like if it's down here at 41, where I think I had it, I have a $1.39 credit. If I had to move this up, how much, say, to the 42, I'm getting like another 10 cents. Okay. So that means that I'm only getting, 'cause again, I'm only getting like 10 cents, 10 cents. I would have to move this. Say if I moved it 2 strikes, say I'm getting like 40 cents. My thing is like if I'm getting that 40 cents, if this thing moves, if this price moves on me, then I have to take an account. This is very again it's skewed, so I'm getting more. It's costing me more the more it moves up. So that means I would have to move this up to accommodate for that, and that tells me the steepness of the hill. And if I did that, how bad will it get? Now it says 196 of that buying power that I initially had. So that's the thing that I always take into account is again, this is pure risk management 101. The moment I get in a trade, I'm always looking like I have to adjust this. How bad will it get? And it's like the SLV. The SLV just got filled, okay, which is this trade that we were in earlier, the SLV trade. So remember, he was off the hill and my deltas were 20. Now I'm at delta. Look at my deltas. I'm back to delta neutral. And my trade, the curve, I'm back to delta neutral. So I'm having to look at. I'm gonna have to close this real soon because it's only like 25 days. So I've got 4 days of silver to do something before I have to close this. Because it's been moving around, and this is like my second roll. And I usually do 3 rolls, and if after 3 rolls I'm not getting what I want, I just usually close the trade. So I've rolled delta. I've rolled SLV analysis. Let's go ahead and okay, yeah, we're using implied. Okay, so I've rolled this thing like 3 times so far, and this thing can easily move. If you look at silver, it can move $1.40 either way. I always double the ATR, and if it moves $1.40, it could easily put me in a situation where I'm really having to do some major adjustments in order to keep my credit. This is about keeping credit. And if I look at that, look at what silver did. Easily. What did it do? Like the other day, it went from uh 29 to 30, or like it went like $1.67 in one day, overnight. So it could easily go $1.67 the other way. So I got to look at closing silver, and I may look at just closing it and reestablishing it. Why? Look at implied volatility. It's still up. Again, I have, you know what? I'm going to close this and just redeploy it. Close it for break even and just redo it again because it's too volatile. Right now, it's still too volatile. Look at that. 91, 37, and the volatility is going up. I'd rather close it for my little $8 and get out right now and just redeploy the trade. Just do it again because it's November 15th. I would rather, and again, I could roll it out in time, but I've rolled it so many times. I would rather close this, redeploy the trade, and so 102, I'll close it. What did I get in for it? I think I got what was my buying power? To tell you how much, this gives you kind of what I did. Let's go to chains. What I did on SLV, my order chains. I did the initial strangle, 60 cents credit. I rolled it, got another 20 cents credit, so that's 86. Then I rolled it again. I got another credit, so that's 102, 108. Okay, so that was 80. So I got 108, and I'm closing it for 102. So that's 6 cents, and then I'm gonna redeploy for December because this trade didn't do what I wanted it to. And just take my little 8 cents and just do it again. Just walk away with it if I get filled. So that's just SLV. I thought it would go down in volatility and give me like 30%. Didn't give me the 30%. When did I get into the trade? I got in September. What was that? No, I got in on the 8th. So on the 8th, I was trying to get 30% between the 8th and so in about 2 weeks, about a week and a half, I was trying to get 30%, and it didn't work. So I'm gonna do it again because it's still volatile. Silver definitely, if you saw what happened the other day, silver just went through the roof. And so, I mean, like I said, every time I get into a trade, I always look at I'm gonna have to adjust to keep those credits. And if I do too many adjustments, like you saw me, I have 2 rolls. If I do like 3 rolls, hey KW, good to see you, KW. If I do over 2 rolls or 3 rolls, brother Will, I won't take the trade. Because I'm doing too many rolls. And if you saw that with silver, you saw all the rolls that I did, on the activity. So at least I got an order out there right now to close this silver trade, and I'll take my $8 and walk away. Actually, it's okay. It's only a debit. Let me move this down. Okay, we'll move it down. Okay, cool. We'll review, send, and so that way I get my buying power back. Because I'm it's costing me 400 to do this, so I'm gonna get that buying power back, and I'm just gonna take it and walk away with the cash, with my bus money. I could take 2 buses with this. Great, $8. That's a couple That's 2 lattes at Starbucks. But I was looking at trying to get 30% per contract on this trade, just to give you So I got in on the 8th. I wanted to get 30% in about a week and a half, and I was up. Remember, I told you I was up a little over 30% last week. I could have gotten out, and I didn't. Silver just went and exploded. Didn't get a chance to get out, so I'm gonna just get out now. I'm just gonna say, okay, I walk away. Could have got my 30% last week. Didn't get it. I'm gonna walk away, and I'm gonna redeploy the SLV trade. So the other trades are on the table that I'm looking at, because I really like those KRE, Delta Airlines. I really like those 2 trades. And those are the ones, I'm gonna try to get on that. Now, in terms of speculation, we'll do another, because I need to put some more positions on, because I don't have enough capital deployed out there right now. I only got these 2 trades on, so I'm gonna go ahead and show you the speculative stuff tomorrow. Today's Monday. It's again, you've got earnings. That's more speculative. When I say speculative, I'm talking things that are skewed to one way or the other, where I think the market may go up or down. Whether it goes up or down, I could care less. I just want to know how much I can make if it goes up, or how much I can make when it goes down. And again, even though it's speculative, I'm still looking at income, bringing in income. This is not about being right. This is about, can I get income? Like the SLV trade, I wanted to get 50%. I was up 30, and I was like, well, if I hang in here a couple more days, I'll get maybe 45%. And silver went through the roof. If you look at the chart, silver went through the roof last week. So I got to get out. I got to, take it, redeploy. Again, this is not about being right. It's just about trying to bring in that income. If you saw my rolls, you saw the activity. I put it on for the credit, got more credit. Now I'm trying to get out, because my thesis was good, but okay, no worries. It's not good enough. I'm out. I take the money and run, whatever little money it is in this, and redeploy it, because I still believe in silver. If you saw it, look at that SLV, the king, all kinds of volume, 18 million contracts. Queen, implied volatility is 92% now. It's going up. That means because silver's going up. Look at the IV index, 37%. This is a doable trade. The best way to do a trade is, if you close it, if you put it on again. My initial thoughts on this trade was doing a silver strangle that was for November 15th, 26.33 was my initial. If I went and duplicated this trade, I did it for 66 cents. Okay, for credit. If I did the same thing again, would I do this trade again? I always ask myself, would I do this trade again? Okay, let's go to, the activity. That was order chains. If I did, let's go to SLV. Just the SLV. The 66-cent trade of the November 15th, when I got this credit, I think those were the rolls. What was my initial silver trade? August, November. There we go. No, I had gotten. Did I get 89 cents credit? Yeah, I think I did. Okay, let's go with the filled trades, not the canceled. We could tell better like this. Filled. Okay, so no, I had Yeah, okay, so I had closed this because I had gotten here and I had closed this. What was our initial? Okay. So I think this is our initial. Yeah. Yeah, sell to open. Sell to open. There it was. Trying to think what I did before that. Okay. Let me just double check. Okay, because I'm only going back. Well, I'm going back 120 days. So if I went back 120 days, okay, 89 credit, 29 credit, 39 credit, 171 debit. So that was kind of a break even as well. So 66. So if I were to do this today, would I take this trade today that I did last week? 66 credit, 380 debit? No, or because I had more I had less buying power. It was I had, the 66 was it definitely wasn't, because if I did this today, the same trade today that I did last week, I would not do it because I had it was less buying power. Now it's 380 something buying power than what I had last week, and a lot of that. Look at the skew; it's still kind of skewed, you know. So so I'm just gonna, and if I were to stay in this, I would be down 184. So that'd be 50%. If this thing went up to again the mountain, I'd be down over 50% over here, and down. Yeah, if it went down, I'd only be down of the buying power 10%, but still, yet that's a big percentage. That means the volatility increased. So I wouldn't do this trade today that I did when I first put it on. So that tells me get out of this trade because the theory, you know, because of silver going through the roof like it did last week, I wouldn't do the same trade today that I did last week, and that's how I look at this. So today was just about income, there, brother Will. I just wanted you to see what I do every day. And what I showed you today, I know it was over an hour and an hour and a half. It only takes me 15 to 20 minutes to do what I did today, but I'm just showing you. Even though I had to take an hour, just to show you, but this is just how it is. Very simple. You get in, you get out. You get your credit, and you keep it moving. We have 4 trades on the table, I think, right now. Carry, Delta Airlines. What else was there? I think it was KRE, Delta Airlines. I didn't think GDX or the other ones were on there. Freeport McMoran, and what was the other one? I think it was just those 3 that I think are on the table for trading. Delta Airlines, Freeport McMoran, and KRE. And so I'm gonna just wait and just see what happens later in the day. I may put these on again. It's Monday, so I'm just gonna just see if markets are gonna stabilize. Well, they've already stabilized. It's already after 7, so or at least over here. So their markets is stabilized. So I'm just sit and wait. And again, this is just purely bringing money in. Always good to see you, KW. This is not about you know flipping the coin, gambling, and no. This is pure bring cash in. That's all I care about right now. It's just it's like a 9 to 5. You put the trade on and you don't think about it. You don't talk about it, you don't think about it. Hold on for 1 sec. Okay. I had to my sinuses are killing me. Yeah, I mean going out yesterday, I mean I haven't really slept much, basically since last week. I haven't been sleeping much, but I've been working out. I had 2 days, actually 2 days, the 2 days off of working out because because the conference. It wasn't really a conference. It was their presentation, the Tasty Trade presentation that I went to. I mean, let me tell you that young brother, he was so cool. But the thing is, I mean, here's how it happened. When I walked in, folks see that I got my cane, and I got my glasses, and it's real dark inside. So, people are going to be helpful. Hey, sir, let me get you a chair. Because I came in, I was a few minutes late because I took the train over there. And so they were like, let me help you out. They see this dude with, looking like Grady from Sanford and Son with a cane. And they're like, okay, let me get this old man, help him out. And so what happens is I get there and this young brother just out of the blue comes up. And I thought he was with the Tasty Trade organization. And he comes up, hey, but again, he was a real kind of effeminate young guy. Couldn't have been over 40 years old. And I was like, ooh, I mean, because when brothers are too effeminate and too kind of clingy, I get a little like, ooh, okay, let me just check this out. I mean, it was cool, Maybe that's just young folks nowadays. For me, it was just, back in the day, it was like, yo, what's up, man? All right, yeah, all right, you bump fist, the whole 9 yards. But he had offered. He says, if you need help, this and that, here's my number. If you need this and you need that, I'm like, oh, that's cool. I mean, really helpful. It's like if you need a ride home, I could even take you home. I'm like, oh, no, that's okay. I mean, I could be Jeffrey Dahmer too. I mean, no, you don't know me. I mean, it's not saying I am. I'm just saying, and to me, it's a little like, slow your roll there, young man. Is this, you know, take things easy. Hey, what's up, my brother? Okay, brother, this and that. And that's about it. And a week, 2 weeks, 3 weeks later, hey, what's up, brother? You trading? Yeah, I'm trading this and that and that. But maybe that's young folks nowadays, and I just don't know about it. It's just something I don't know there, brother Will. But when I saw that at toward the end of the conference, I was going in just to thank the folks at Tasty Trade because I've been watching them since day one, and I just went in to go say thank you. And the next thing I hear, because he was looking out for me. That little European got in front of me, like he wanted to cut in line, and all I was doing was thanking folks. I'm not asking for advice. I know what I want to do when I trade. I'm just like, hey, you guys had a good program. I'm out of here. And there was a young Becky there. What's her name? Can't remember. I just Becky, and she's a mathematician, and I do appreciate mathematicians. If I want advice, then I will, because that's what she's physics. She's into physics and math. So I'm gonna definitely, hey, I need to talk to you, because you're mathematically oriented. But this European got in the mix, and the young brother said, kind of tapped him on the shoulder, hey, sir, there's somebody behind you. He's trying to. He says, hey, this guy was up there. He's looking out for me, and I got to hand it to that young brother, a cool cat. He's looking out for me. But the thing was, the next thing I hear him behind me, well, we could take this outside, because the European was getting in that young brother's face. And that young brother shut him down in a heartbeat. And that's what I really appreciate. I was like, ooh. But I was trying to cool everything out in a ways just by like changing the conversation and talking like as if, like, what's the square root of Wednesday? Just because, hey, this is not my forum and I'm trying to get info. And in a ways, I'm trying to teach young folks, yeah, these beasts can get in our way. But if we're skillful, we could get what we want. And that's what I wanted. It's just kind of showing him, I understand and I really appreciate it. I understand where you're coming from. This little, Albanian, whatever. This dude, he was definitely either Albanian or something, Italian or something. He was out. He was out of pocket. This little European was out of pocket. A lot bigger than young brother too. But that young brother got up in his face, and I heard that dude cower like it was nothing. I could hear it behind me. I couldn't see it, but I could hear it, and I could tell in the voice that the little, the little white boy was getting scared. And I was like, "Ooh, this young brother, he's shutting him down. He's shutting this dude down." But I was like, "Bruh, let's just get this information. Follow my lead." But I was trying to do it without, so I made the conversation different, talking about all kinds of shit. Some dude from Germany was standing. I was, oh yeah, Germany, because I'm like letting them know you could get what you want, even though what you did with that European was the right thing to do. Make sure you don't leave without getting what you want. And me, I wanted to pick the brain of that mathematician that was over there. That was my goal. I could leave and show my blackness, by shutting this European down, or I could get what I want. And that was more inclined, skewed toward getting what I want than anything else. I wanted to know a little bit more about this little mathematician that was there to see exactly the extent of her knowledge, in case someday I may have to say, hey, how would you look at this geometrically, and then I don't have to pay for that advice. I mean, life is about getting what you want there, brother Will. That's all it is. That's what I'm trying to teach a lot of these young folks. Life is always about getting what you want, not necessarily getting in terms of how you feel as much as it is of getting what you want. And I was trying to like do that in a roundabout way for that young cat. And I think he learned. I think he looked good, brother. I need to, again, he was a little bit kind of clean and a little bit, I was like, ooh, slow your roll, bro. In terms of, and again, that's because I'm an older guy. I'm shoot, I was probably twice his age, and I'm like, just chill out a little bit. I'm looking like Grady from Sanford and Son. It takes me a while to catch up, but to me, back in the day, that would have been called a little too omnipresent, a little too clingy. Back in the day when I was growing up that age, it'd be like, look, bruh, I see it when I see it. Okay, cool, bump fist, the whole 9 yards. Then when there's money to be made, hey, yo, bruh, let's do this. Nowadays, I guess folks are just very, very omnipresent. Maybe that's just where young folks are right now. And that's just for me. But it was cool. It was cool. He's a good brother. So he's definitely one I'll definitely try to help in terms of trading and whatnot. But I just wanted to show you that, brother Will. Hopefully that gives you kind of a context of what I'm looking for. So we got 3 trades. Again, I'm gonna wait for a little bit and see if there's more volume coming into some of these. Not to say there will, because the trading day is happening. But if there's more volume coming in, I'll go ahead and more than likely I'll go in and place those trades. If more volume comes in on those, carry Delta Airlines, Freeport McMoran, those are definitely strangles that I want to get filled. Right now, it's just I'm not seeing the volume that I want. The volatility is okay. The prices are okay, not incredible. But, hey, we'll just sit and wait and see, and if it goes the other way and it goes against us and it was a trade that was not meant to be made. I've had a lot of trades. I showed you the ones that never got filled that I could have gotten paid on. They just never got filled, and that's how this is. So, hopefully that helps you out there, Brother Will, in terms of what I look for. It only takes me 15 minutes. I put the trade on, or 15 minutes to do what I showed you today. This is purely income. We'll go into butterflies and stuff like that, like the other trades that I'm looking at. I'll give you a preview because I like this. This business is fun. I love trading. I mean, this is it. Just especially when it goes your way. It almost never always goes your way. But I was looking at FXI, which was again high volatility. And we saw. I mean, again, let's take it from the beginning. Let's go to E-mini ES, or now we could go SPX. SPX is down. Volatility's up. Good, which means VIX should pop. Where's VIX? Fear is up $1. Nice. 20%. Close to 20%. I like that. Let's go to Bitcoin. Where's Bitcoin? Bitcoin has been rocked. I like that. Oh, things are looking, oh man, this is looking like I might be able to get into some of these trades. Bitcoin. Let's look at bonds. Oops, ZB. Where are bonds? Bonds down. Wow. This is a great day for looking for trades. Great day. Let's see, maybe markets will give us a little bit more in some of these. Well, remember XLU didn't have any volume. Tilray is a penny stock. Let's see, what else did we have? I told you about having 2 metals positions, but I don't really like to have that much metals on. I could go to GDX. GDX is like silver. It's like being redundant. Let's wait for data and see if data comes in on this. I don't know what. Okay. Yeah, see that? GDX is doing the same thing as silver. So I really don't like too many trades like that on. But, let's take a look at this. Let's go to GDX. But no, before we go to GDX, let's continue to look for stuff that's affected by a lot of volatility. Let's go XLU. XLU started to even out a little bit. Let's wait for the data. I'm kind of liking the fact that this is down. Okay, let's see what we got here. Still yet XLU. It's not down enough for me to freak and say, oh my God, let's start selling strangles. Let me see. Again, volume, got a lot of volume. XLU is cool. The only problem is the IV index is only at 20. Even though we got a good IV rank, IV index is down at 20. XLF, I've indexed it down to 20. It's not like the greatest of, like, look at Freeport McMoran. I love that. Let's see what else. What else we got? Alcoa. Look at that. This Alcoa's 5-day change is down. I had a great trade on Alcoa, but it never materialized. I would have been up 50%. I was trying to get in that earlier. Emerging markets. Look at that. I don't like that. It's 1% down. Only 21% on the IB index. Let's see. Anybody else here? We looked at SMH. That was the other trade we were looking at. SMH was a condor we were looking at. Wells Fargo. Wow, Wells Fargo. Did it have? Yeah, because banks usually have earnings first. Yeah, so Wells Fargo does not have earnings anytime soon. Huh. Wells Fargo, look at that. A lot of contracts. 53. Look at that. And volatility's been going up. $64 stock. I like this. Let's take a look at Wells. What has it been doing? Now, this thing can easily move $3 a day. Not saying it will, but look at that. It went from $57 to $62 overnight. So this thing could easily move $3. And remember, in the last 21 days, its average price is $1.47, but it could easily move. I always double it for the average true range. That tells me that when I do that, it tells me I'm going to have to adjust it. When it goes that much average true range means adjust. I never go into a trade that I don't think I'm going to adjust. Let's go to the first standard deviation. Look at the deltas over here. 14 delta right here, first standard deviation. 112 of 643. I'm not getting enough credit. I'm not getting paid for it. The juice is not worth the squeeze. I need to get more credit. Even though Tasty Trade and a lot of other guys would take a trade like that because, they don't mind getting a tenth of the credit or a third of, or a fifth of the credit. I'm greedy. I want more credit. Even though we got a 93 chance of making 93% probability of making 50%, you get paid $3 a day or close to 74% chance. Delta is neutral. Gamma, the hill. I don't like the hill. That's scary. Why? Look at the buying power. I'm going to have to spend 643 to make 112. Again, the juice is not worth the squeeze for me. I want more credit. That's going out to December. I want more money for doing it. If we went back from December 20th, if we stayed in this for 1 week, okay, I'd make $70. Not bad. For 1 week. 2 weeks, okay, almost 50% if I stayed in for 2 weeks, theoretically, say 45%. But look at that. Let's see the hill. If I were to take this, if this thing went against me, I'd be down 1/3. Remember, this thing can move $3 in a heartbeat. So if it went against me up to those short strikes, I'd be down 1/3 right there, and I'd be down about a quarter right there. I'd be down like 25% down, about 33% down on the upside, 25. If it went against me, it just moved and crashed, which means, like I say, anytime I get into a trade, I know I'm gonna have to adjust. If I get it, if it went up against me, then what kind of credit would I get? That's 112. Say if it went up against me, then it'd be 150. So I'd be getting 40 cents. But look at my buying power. I'd be getting 40 cents, and that would be going up 25%. That tells me that this is definitely, the gamma. Again, the hill. Remember, this is skewed to the upside because look at the hill. Look at the hill. It's a lot thinner. You can move further out to the upside. If it went down on me, then, and here's where it's at before. Let's see, where was it at before? If the market, again, every time I get into a market, I think I'm going to adjust this. I never look at a market and say that it's going to always stay there. If I got into this up here, market goes down 644, it goes down, it's 113. If it went down, okay, I get 40 cents. It's not as bad if it goes down. Okay. Even though I don't like the buying power effect on it, it's more buying power, but it's not a quarter. It's definitely going to give me, so this is one that I don't mind if it goes down. If it goes up, I'm screwed. And I won't say screwed. It's just I'll be paying for it. Why? Because it's markets is looking at more risks to the upside. Look at what Wells Fargo did. So I'm not saying it will stay there, but I'm just really, really, careful, for lack of a better term. But you know what? I will keep this on the table. Let's look at the volume. The king always has to be there. Volume has to be there. Not a lot of strikes. There are definitely a lot of strikes to the downside, but to the upside, and that's just a strangle, there's not a lot of strikes. So if I did this as a condor, 70, 75, $5 condor, 24, look at that, I'd have to go 24 deltas, 60, 55, okay? So I would be looking at, this would be like my iron condor. I get 131 of 369, a third the width of the strikes, that's perfect. 80% that I would make 50% on this trade or more. I get paid $1.52 a day to hold it. You get a 59% chance, so it's a little thin in terms of the probability of making a penny or more at expiration. You're delta neutral. The hill is a little steep, not terribly steep, but it's a little steep. I expect that. A lot of skew to the upside. Curve. If I did this trade, let's look at, okay, if it went against me, I'd be down, say, 37. So I'd be down 10% on one side if it went against me. There, I'd be down 20% if it goes to the upside. So I'm always looking at how bad could it get. If it got bad, I would have to move the strike up. If I moved it up, it increased my buying power by about 20%. How much more would I make from here, 131, to here, 207? So I'd get like 60. I don't mind that. I don't mind this as a condor. So I'm going to keep Wells Fargo on the table. It does tie up, the buying power, but I'm not mad at this trade. It's not like, oh my God, this is the trade of trades. I'm not mad at it. It's like, okay, if I can't do the strangle, I would look at the condor. And let's see what the initial buying power of the strangle was. Do I want to tie up this amount of money to do this trade? Look at that, $1,000. I don't want to tie that up to do this trade. So if I were to do this, I would do it as a condor, just knowing full well what I have to do to adjust it. Kind of like what I had to do to the IWM to adjust it. Even though we're down a little bit on IWM, it's just something that I know I had to do to adjust it because IWM got away from me. So I had to readjust, even though we only got we only got $4 of profit today, which is nothing. It's basically flat. But here's the thing: the deltas are neutral. That's what I mean. It's very important to keep the guy on the hill. Keep him at the top of the hill. That's, the key of this is try to get as neutral as you can, because that means you're at the top of, if you have to get out the trade, you're at the point where you either break even or a small loss. That's the key. Keep them on the top. So hopefully, Brother Will, that's cool for you. Gives you just kind of an idea. And KW, always, again, it's the third, fourth time. It's always good to see you. But it gives you kind of context of what I look for. And we'll do this on Zumbi Trading on this channel, because this is the trading channel where I do, a lot of trades. But this is just, so now I got 4 trades on. Then I'm gonna wait and see what happens. I got 4 trades I need to, I'm just gonna wait a little bit and just see, where things are at before I place it. I do like the Wells Fargo a little bit more than I think about it. It's not terrible. I don't mind that trade as much. It's just that, it's not like the do all say all. Again, this is about getting income. Just bringing in money every week. No matter, as long as you put a bunch of these on. So we got 4 trades. We're going to see if we could get filled. KRE, Delta Airlines, Freeport McMoran, and Wells Fargo. And we'll see if we can put those trades on, later in the day. See if those are filled. See what happens. Y'all take care.